Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of some improved data out of China, but it isn't all good. But first in the US, the factory survey for the New York region shows it maintained a strong situation. New orders and shipments posted substantial increases and unfilled orders rose. Employment grew at its fastest pace on record and the average work week increased. The prices paid index there held near its record high and the prices received index reached a new peak. In Canada, with the re-election of the Trudeau government, a campaign promise is about to be enacted with a special 3% increase in the tax on financial institutions who make more than $1 billion in annual profits. They're also about to collect a special fee from them too, called the Canada Recovery Dividend. Both are expected to raise about $2.5 billion per year over the next 4 years, with the monies going into a housing fund to ease affordability. China's retail sales rose by 4.9% in October, faster than the 4.4% increase of the previous month and beating expectations of a 3.5% increase. This was the strongest pace in growth in 3 months as consumption strengthened after the pandemic outbreaks in some regions eased. But in a longer perspective, this is ho-hum for China. Industrial production also shifted slightly higher, and although that also beat a tame expectation, the economic expansion remains quite tepid there. Electricity production actually fell again, has been falling since July, but at least it was 3% higher than the pandemic-damaged month a year ago. Generation from coal was up 5.2%, from nuclear up 17%, but a big 12% decrease was reported for hydropower generation. But easing back were Chinese house prices, which rose 3.4% in October from a year ago, but down from 3.8% in September. But that means they fell in October from September, something that hasn't happened there since 2015. And new construction starts in January to October also fell 7.7% compared with a year ago. So both supply and demand eased lower in October, quite unusual for this huge housing market. We should also note that farm fertiliser prices are rising and fast, now sitting at a record high level in North America. The same is happening everywhere and may spill over into food prices if high input costs curb supply. US Treasury 10-year yield opens today at 1.62% and 5 basis points higher than this time yesterday. And the price of gold will start today down $2 at $1,863 an ounce. And oil prices are lower at just under $79 a barrel in the US, while the international Brent price is now just under $80.50 a barrel. That's $1 down from yesterday. And the Kiwi dollar opens today a little firmer at 70.6 US cents. Against the Australian dollar was soft at 95.9 Australian cents, but against the euro we're firmer at 61.8 euro cents. That means our trade-weighted index starts today at 74.8 and slightly higher than this time yesterday. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.